All right, welcome to Trading Markets. Even in this edition, it's with your Joseph. I'm not a financial advisor. But if you look at this, all right, so this black line. So let's look at these two lines, the black line, the red line. The red line is the 200 EMA. The black line is the 9 MA. Yeah, 9 MA. So that's the 9-day moving average because I'm on the daily chart. So what it does, it takes the last 9 bars and creates an average of where price would be. Now, anybody know how to use the 9? Anybody know a simple strategy off it? I'll show you guys. I don't know if I showed you guys before. So very simple, right? This is how you use the 9-day moving average and make a whole strategy off of it. So whenever you get a candle that closes above the 9, you follow the trend. You stay up, you follow, and you see, like, say you got in as soon as this candle closed above the 9, you could have wrote it up here, and then as soon as you cross the 9, you get out. So you enter right here, and then you get out. I'll just say out. You get out right there, right? So same thing for a downtrend. When you close underneath, you could play it down, enter for a sell right here. And then once you come back to this line and you cross it, you get out. But you can get out whenever you want. You know what I mean? You don't have to wait. But those are like some easy ways to use it. Again, you close above the 9, you ride it up. Until you cross underneath the 9, you could stay in. You could even stay in. Well, maybe you could get out because you see you did cross underneath before you went up. So, but basically, you can use it as a way to get in and get out of trades. You guys follow me? Any questions?
Yes.
Yeah, I hear you.
So again, close above the 9. You ride it out as far as you can, to get out by the time you get underneath. But you should get out way before that. But at least that's a last minute get out, right? So again, what just happened? What just happened, people?
It closed above.
So what should we do?
Ride the train.
There you go. Now, you need more confirmation than one. That's just the 9, right? You need more confirmation than one. What other confirmation do we have? Anybody notice any other confirmation?
I guess the divergence at the bottom.
The supply zone. Demand zone. Demand zone. Yeah, it bounced off this zone.
Mm-hmm.
Not only did it bounce off that zone, it created a trend line right here. You see that?
Mm-hmm.
So it bounced off that zone. Now it's respecting diagonal support. And you see how, remember, Trev, we were talking about structure. What is this making? What is this making that lets us know that we now created an uptrend? What is the price doing? What are the candles doing? Do you remember? How
My
do you
bad, bro.
how
Ask
you
that
know
one
you're
more
on
time.
uptrend? Oh, go ahead. My fault. What are you
No,
saying?
I'm sorry.
I
Ask
was
that
gonna
one
say,
more time.
yeah. How do you know you're on an uptrend? What is it doing? What is it doing to confirm that it's an uptrend?
Higher or low?
Higher low, exactly, and higher high. So
Mm-hmm.
you get higher low, you get higher high. It's confirming we're on an uptrend now, people. So now, you know what I want? I want us to come back to this line before I get in. Maybe like right here. You know what I mean? I want us to come back down before I get in. Why? Because if I get in right here, where am I going to put my stop loss? Does that make sense? Anybody understand questions?
So basically, you just waiting for a retest
I'm waiting
because
for
they're
a
already
retest.
broke. Okay.
Exactly. Because it's too dangerous to get in right now. Because you have the biggest chance of things working against you. But if you get in close to this line, now there's a less of a chance of it going against you. And you have less space. Like let's say you even came back to the purple line. you still have space that even if you got in at the red line, you wouldn't get that bad of a drawdown. You know what I mean? That you could still recover. So this is why we're really looking at energy, you know. And also, I want you to also realize this, right? With no redo. With every moving average, price always does this around every line. You're gonna notice gets away from the line, gets away from the moving average, but it can't stay away from the moving average. Then it gets away from the moving average, then it can't stay away from the moving average, right? It got away from it, can't stay away from it. Got away from it, can't stay away from it. Got away from it. You guys see the pattern? You guys see that?
Yep.
So it basically, like a wave, goes in and out between the black lines. So you can use all these things together to make sure that you get in the A1 setup. Close above the 9, check. Demand zone, check. Okay. Support resistant, check. Once you get 4 of these, I would say you have an A1 setup. Does that make sense to you guys? So now, if this comes back down and retests this line, that's a 4th check right there. And then I would enter this trade to potentially bounce up. And that's how we're gonna play this, ladies and gentlemen. So watch oil. So that's the daily, and that's XLE. XLE is the energy sector. So now even when we go on the monthly, we got to see big picture what's going on. Big picture confirms it too. So now this is an indicator I use where I look for time frame continuity to make sure all the time frames are aligning. So let me pull that out. Where is it? Why is it not showing? Oh, it's right here. So you see it right there. The daily, the weekly, the monthly, the quarterly, and the yearly. You guys see it?
Mm-hmm.
But let me look on this on the bigger time frame. So right here on the weekly. So I want to show you the weekly because now if you're thinking about swing trading, you really want to look at the weekly. Look at how we're about to overtake this last week's high. Once we do that, it's up. And I would target, and if you follow the strat, if you know how to trade the strat, all you got to do is use the last high as your target. So here's an easy plan. Once we break this high, we're gonna target the next high up, the 96. That makes sense to you guys?
Mm-hmm.
So that is how you play the strat. So now you want to know how long can you play the option. So that's when you pull out the ATR and you think about expiration date. And you think about how long could it take for this to happen. And you see one, we're starting to pick up pace. That means that volatility is starting to increase. That's one, right? Then you see we're moving about $5.43 per week. So that means that if we break this, right, then we could probably eat this up in a week, potentially, right? But to be safe, let's say it's going to take 2 weeks. Does that make sense to you guys?
Yes.
So now, if you want to buy an option, you can put a cushion on that and buy 3 weeks out, 4 weeks out to target this $93 area, $94 even. Does that make sense?
Mm-hmm.
So that's how you could potentially swing trade it, but you gotta wait till you actually break this. And then if you want to be extra careful, I would still wait for it to come back. So this is me, right? To be extra careful, wait for it to break. Either take a small position or wait for it to come back and then break. That's usually what I want first because I want this line that was the resistance to identify itself and clearly become the support. I want to be clear support. That's the safest way to enter if you want to enter this long term. But now we got about 2 minutes. So if you guys want, we could log out, log back in, and then I'll go over rig, and then that'll probably be it. whatever else you guys want.
I'm gonna go out and come back.
All right, so I'm gonna close and I'm gonna come back. See y'all in a bit.